Alright, so I've decided to make this video, right, because I've posted my outlook on X, and there's just so many nuances that I could explain, and there's so much things that I was looking at that I haven't really made a video on yet. So it seemed like a perfect opportunity to take my time to make a video for anyone who wants to go more in depth and learn how to read context and whatnot, and see like what my point of view is with auction market theory, market profile, and volume profile, all that. Alright, so I'm gonna go into, I haven't really thought this video out, right? I'm not a fucking YouTuber. I've just decided to make a video of pure boredom and wanting to teach. I haven't really taken anything this whole week. It's been fucking dick for me, right? And I didn't catch these longs, obviously, because I'm not gonna be up at 3 a.m. like. So I'm gonna be going over failed auctions, higher time frame, probability. Then I'm gonna go over like what I see. So yeah, let me just start off with the market profile. So normally whenever I get on, I like to open up my Sierra, get on my market profile. I mainly look for, alright, is there anything noticeable? So the markets, something you need to understand is there's always going to be, you need to look for the support and the resistance. That's simplified. Alright, now your trading style is how you find that. Alright, how you find the support and the resistance, how you find where those buyers, passive sellers are trying to get in at, where they're clipping hard, right? And then maybe you want them to castle positions, which is essentially just protecting them, just like in chess. So you just want to see that. Alright, so there's a lot of ways. Now with order flow, the popular ways, this is just like some basics to start the video off. Who knows, this might be 30 minutes, but with order flow, the volume profile, for example, some ways you can find support and resistance are the shelves, the extremes right here. Right, we have this extreme, right? Sorry, it's just but you see this auction that's highlighted in gray. The extreme of this is these ledges, shelves, whatever you want to call them, right? Alright, those are the extremes. Now the reason people use those in order flow is because whenever we're auctioning off, we're likely to have buyers at discounted prices, lower prices, low of the auction, and sellers at the high of the auction. And normally volume tapers off, which is something I actually look for on the DOM. Whenever I'm about to get into a trade, I want to see that volume taper off, indicating that we're at the low of the daily auction, sessions auction, whatever, right? So that's the only reason shelves, ledges work. Now, those are VP levels. You can also look at LVNs, right? Maybe we're either going to move past them fast or reject from them fast, right? You have to have some strict criteria for that. If you're using just VP for your levels, you need to have strict entry criteria, because you can have like you have your POC, ledges of this current balance, prior balance ledges, POC, LVN, like you're gonna have levels everywhere, but it's refining those levels and having a strong entry model that counts. All right, so those are some levels on the VP that I look for. Market profile, which is what I start off with, there's a lot of things you can look at market profile, and it's probably my favorite tool secondary to the DOM. and then it's VP. But you can use market profile to determine your bias, find support and resistance. So let me go over that really quick. So first of all, some clear areas of support and resistance from the market profile. And I'm saying support and resistance to just keep it simple. I mean, I know I'm not just like one of those fucking jerk offs. Oh, we made a fucking wick. Let's go support, or they mark out the BISI, SISI, whatever the fuck they're calling it. Right? So here at the ends of the profile, we have access. All right, and what access is, people call it spike base, access, buying tail, selling tail, right? This is a buying tail, or it's access, and essentially it's 2 or 1 periods at the bottom of it, of the bottom of the profile. Now you need to split the profile and make sure it's not just the opens rally and it's actually a buying tail. So here we came down, passive buyers came in, right? I had a level, passive buyers came in, and then they started buying it up, market, and then we came back, we tested it, passive buyers held their positions, castled, and we went up. So that's an area of support, obviously, using the market profile, and it's the same thing for the other way. Now, an example where it's not that, right here we close, and then we jump up here. So that's not a tail you want to be looking at or referencing, right? But here this is a tail, here this is a tail, spike base, whatever, right? Going back, like here, this is a tail, right? So the tail's right here, and then we actually open on it, right? We start to reject. Yeah, this is, I wouldn't really use this as a tail, but I mean, shit, if you're trading 1800 open and you think it's going to be the low, sure, have at it. But you get the idea. Those are the tails for the market profile. All right, then another thing I look at is ledges. And this is very simply put, it's just a fall off. Normally it coincides with volume, but it's a fall off in letters at a point. So here, this is a ledge, right? So normally here we drop like 3-4 letters, drop like another 5. Here we drop like 6, 7, 8 letters. So that's your ledge, right? It's just a really steep drop. Like here, steep drop, steep. And sometimes it's not always going to be that steep depending on the profile. But that has like the same concept of a ledge or a shelf on the VP. Alright, so those are some of the main things I look at on the market profile whenever it comes to levels, right? And obviously we have our single prints, which here we had our single print, and then the 2 period. So the 2 period was essentially like something like this. So this and this is resistance, got ran through with the single print. So I would be looking at this as my area of support. Single print fill, and then this. And that was actually my level, along with some other things on the footprint that were there. But yeah, that's how you use like access and prints and support and resistance in one. All right. So now that you kind of have an understanding of the market profile and some of the ways you can find the levels, right? It's ledges, access. That's all it is, to be honest. Now you can sort of see my perspective going into this. All right. So obviously we open in value. So I ideally want overnight to range and sort of build on this value. And this, you see how there's nothing significant at all here or here or here. There's no significant like ledge, access, there's nothing. It's just low node. It's just a low node. And then here we have value. So that's why this zone right here is this is like what gave me the incentive that I think overnight's just going to range around here. And it's also in the bulk of this value. So now that I think overnight's going to range, because I don't have any levels, like I'm not going to be buying here like fucking cunt because there's an HVN, like fuck off, right? I'm not going to be buying there. But if we look at the bottom of this where we've had reaction before and we've clearly had interest in buyers around here, and here we rotated down again, right? So we clearly have interest in buyers in these two zones. All right, just quickly eyeballing it. Now as we go further into that, we're looking for levels, right? So we have this auction, no levels there. The reason I wouldn't look at this ledge or shelf is because look how dick this profile looks like. It looks like a lower end chode. It's disgusting. I'm not using that as my levels, right? Sure, it's the lower extreme of the balance, but to me, I don't like it. And I still want us to rotate back down into here. Like this New York open, like right around here, and I really wanted us to rotate down into here and get some bids off, but I didn't. And I had levels up here, but I wanted us to ideally take this high out, and we still haven't, so no trade. I did take some like breakouts like right here for J and K period. I closed right there. But besides that, so down here, market profile, we have one thing, right? So market profile, way we're looking at it here, this is a clear zone where we've had resistance and then support. So we know for a fact buyers stepped in here passively, aggressively. All right. Now we know this zone is where I want to be getting in, right? Because if larger players, much larger players are stepping in here, why not join them, right? They're the ones who caused this fucking huge rally. All right, so, and obviously news and whatnot, but now that I see that, all right, there's our market profile level, something there. And then what I also marked out is this ledge, right? So where we see the largest fall off in letters, which is like the simplest way I can think of describing a ledge, we have that there. So that's my ledge. So I'm looking at this or something here, anything above under O2s, right? Because it's this access. When we look at the volume profile, we have another area of value, right? We have this bulk and this bulk. So what I immediately think of is auction market theory, failed auctions. Now, the concept of failed auctions, I've learned it from OnlyTix. He's an amazing teacher. But essentially what it is, I may make a video on it later on. But essentially, we're auctioning off. Here I actually have an example. I missed this because I was being a cunt. Right? We're auctioning off balance. We attempt at breaking out of this balance and accepting into this. All right, so there's two things we're going to do. This is how I teach it. If we break out, normally overnight holds above the value. I've seen this happen millions and millions of times. One day I caught who knows how much fucking points on ES because I saw overnight doing this 930 absorption, and I held that shit all day. Right? So here we're doing the same thing. Overnight is staying above this extreme, and we're not rejecting. So this is our first indication that we're probably going to break out. Now using that, now there's two things we're going to do. We're either going to accept into this, maybe target this, take the point of control and balance here, do something in there, or we're gonna fail to auction there, and we're gonna reject. What did we do? All right, so I had two levels. I had one here, one here. The one down here, I was being a cunt. I took a trade I wasn't supposed to, and then I traded 2 times at the level, which is breaking another one of my rules. I should have just lost a trade break even, but instead I lost 2 trades. So I was done for the day, and I was pissed at myself. So I just went to the range and went over all my rules, called myself a cunt, all of that stuff, right? But then I look at my phone and we're dumping like a motherfucker. I see what we did. Essentially what we do is we went higher to my other level that I was waiting on. It was one of my favorite levels. We had absorption. We broke. We retested it, all right? And then sellers castled their position, came back in, and then we dumped. And in auction market theory, the balance we break out of, if we accept back into the balance, we have 20% odds of just ranging again and 80% odds of hitting the lows. I always play the 80% odds, so I would have been targeting this from here. Just think about how much fucking points that is. Right? You can imagine how pissed I was at myself. I haven't broken my rules since. I mean, it's only been 2 days, but I've been very strict on myself. So that's essentially what a failed auction is. Break of value, failed to accept or auction off higher prices, accepted 80% odds of the lows, 20% odds of auctioning. Now here we've had that scenario opportunity to play out. All right, we have this auction here. We break out of the auction. We come to an area of support or resistance, so in this case support. We have the shelf lining up with the TPO level. We have prior resistance, new support. We have a lot of buyers we know came in here. So there's a lot of things, like all 3 of my things that I look for in a level, they're all here. I mean, I still have yet to look at the footprint. Where is it? Yeah, I still have yet to look at the footprint to see if there's anything, but the levels look good right there, right? So we're breaking out of the value. We're stepping into this auction. If we accept, we're just going to come back and range in here. Maybe you short this and target point of control, right? That's like 20 points, something like that. But the second thing is we break. Those buyers that were there are likely still there. They buy it up. You see absorption, reloading, whatever, aggressive buying. If any cunt says CISD, I'm going to slap you with my dick. I fucking hate. It just makes no sense. It gives me a headache. So we come down here, right? We see something that's backed with data that gives you a larger perspective, and then you enter. If I enter, I'm probably going to get, just call it 6,000s. I'm probably going to get filled like somewhere over here if we get down there. But call it 6,000s. The top of the auction that we've had is really up here at 100. So that's a 100 point move that you could hit. But I'm not going to be I might let partials ride to that. But what I'm thinking is I still need us to accept into this value, and to accept I want us to hit like a point of control in there. And I want us to obviously take out these highs. So the higher probability is playing this sort of ledge right here at this bulk of value that we're breaking out of, and those are 80% odds. Something else I have to add on to that is we have a poor high there, which is 2 periods or more stacked on a high. I haven't checked NQs. Yeah, NQ is a poor high as well because it's only one period. ES, I don't consider it a poor high if there's only one period, mainly because it's a lot thicker of a market. But yeah, that's why I think I can catch 70 points if I see the order flow down here. Because your target, this is why I was considering switching to failed auctions only, because your target's always going to be across a balance. It's always going to be the largest target. So your win rate's going to be high because the setups are going to come rarely and the entries are going to be strict. But then your RR is very high. So your win rate's high and your RR is high. It's why it's one of my best setups, right? Normally people sacrifice win rate for RR or vice versa, right? So that's why I was considering switching to only that. But there's that. Then if we look at the current year's profile, we have our ledge starting right here. And then it's kind of just an HVN on the yearly, but it's really just this ledge that you see right here. This is what it is. So that's something to take note of. It lines up with the volume profile, obviously, but yeah, 601 is probably going to be where I start to look at the order flow. And then RTH, again, this open drive for RTH is very good to see because that shows us a lot of buying was being done. At market open, it's likely to happen again. It's a good reference point. Same thing for here, right? We have this buying tail and then that little gray box, black box, is this resistance, new support. And we also have this low to take note of, all right? Now this low, if you pay attention to it, this low right here, our level, it's probably better if I go on here. Our level is above the low, right? Where I'm ideally trying to go bid is 01 to 94. On NQ, however, it's under 309, so under that low. Now, I fucking hate ICT. I hate it. But one of the things I do consider are SMTs because I know they work. I actually know a really good order flow trader who still looks at SMTs. And all he trades is his order flow. He doesn't look at anything else related to ICT. I'm not saying he made SMTs. I'm saying related to ICT, he doesn't look at anything else but SMTs. And I do as well because I've seen them work. I know it works. And here we have a very good opportunity to SMT these lows with NQ and ES. So that's adding even more to my plan I've built out for myself. So what have we gone over in this video? Support and resistance levels on the TPO, volume profile, failed auction setups, what I see here, some other nuances on the TPO. Yeah, that's pretty much it. On the footprint, I also have these levels marked down here. But on the footprint, I guess I'll make another video on what I look for there. But yeah, I don't think there's much more to do for this. I mean, yeah, it's pretty straightforward. Build your edge around something that makes logical sense and always seek to enter on support and resistance. How you find that is completely up to you. I simply chose the way that makes the most logic, and it's using market profiles, volume profiles, and just price action, right? Because here you can see passive passive sellers were stepping in, selling these, and then buyers stepped through. So now these sellers are now passive buyers, and look what they did. They came in same zone. So that's price action, and then that's obviously a level on the market profile. It's a single print fill. So those are the price action, market profile, and then I already explained the VP. Yeah, there's nothing else I should really go over. I mean, it's pretty straightforward, but yeah, I just wanted to make a video on some nuances. Something I saw. Reason for making this video is because I saw potential in explaining all those things like failed auctions, levels, whatnot. I might make a video on the setups more in depth and some of the order flow more in depth, but there's just so much ways to look at it. Like, there's so much calculations you can do too for like trying to quantify it, which is something I've been getting into. But yeah, I might make a video on that towards the future. But yeah, that's my outlook. I'm bullish. I want to get here. Now, please keep in mind, this level can still get fucked, right? No matter how much confluences I have here, it can still get fucked. I'm not bitching out of saying this is a good level. I'm just saying if the passive buyers aren't here for some reason, I really think they will be. If they're not here and they don't get in here, we're probably going to accept into this and just range in here. It's never 100%. That's why I look at the order flow to enter, and I don't just limit it off. But yeah, it's the whole video. Yeah.